So, welcome to Kemono Forex. Today, we'll be talking about what is Forex trading. So, first of all, Forex trading or foreign exchange trading involves the buying and selling of currencies like the US dollar, the pounds, the euros, even many other currency all around the world on the foreign exchange market to make a profit. So the main aim of every trader is to make profit for the market. Either you are buying or selling, your aim is to make profit from the forex market. So traders do speculate, which is they analyze, do other fundamental technical analysis on the changing values of different currency relative to each other. If the price will rise or fall, whether the price is rising or fall, your aim is just to make profit. It's a decentralized market and trading will cost 24 hours a day, 5 days a week, meaning from Monday to Friday, every 24 hours except for weekend. So this forex trading is the largest market in the world. Talking about the London Stock Exchange, the Tokyo Stock Exchange, the New York Stock Exchange. Forex trading is a $6.6 trillion market. Meaning from this $6.6 trillion market, there is any amount from here you just have to make from it. So let's look at some examples. Let's say you believe the euro will strengthen against the US dollar. Then you decide to buy euros and sell an equivalent amount of US dollar. Imagine you are owning a US dollar and you believe that the euro is going to rise tomorrow. You can decide to sell your US dollar and buy euro. So if the euros do strengthen as you anticipated, you can sell your euros back for more US dollars, making profit. On the other hand, if the euros weakens against your own analysis, you might incur a loss. Forex trading involves trade these currency pairs, and the goal is to make profits from fluctuations in different exchange rates. So forex trading is all about selling high and buying low. You can see the chart here. So on our next talk who trade the forex market. There are various participants who engage in the forex market, and they include the first one is the retail trader. Individual traders like you and I participate through online platforms which are brokers to access market for personal investment. The second on my list are the institutional traders. These are large financial institutions just as bank, the hedge funds and pension funds. They trade significant volume, very high volume amount. These people dey place billions of dollars in this forex market. They control the market. The third on my list is the central bank. Every country, you and I know that every country have a central bank. And this central bank, they are involved in forex trading. So the central bank and national central banks, they intervene in the market to stabilize or influence their own currency value. That is one thing about the central bank. Their own focus is about their own currency in different countries. The fourth on my list are the corporations. These are business involved in international trade. They use forex market to hedge against currency risk or facilitate transactions. The fifth on my list are the speculators. These are some participants who enter the market purely to speculate on currency movement, and they aim to make profit from price fluctuations. These are people that have a lot of money, so they speculate that this price will go up tomorrow or will go down tomorrow. So they invest large amount of money just to make profits. So the forex market is highly liquid and is diverse, with participants ranging from individuals to major financial institutions. Thank you.